NIO, Upwork, Square, and more approaching $20,000 in unrealized gains. This is episode 5 of the portfolio series where I cover recent news on each stock and do some occasional, albeit mediocre, technical analysis telling you where I'd like to personally buy. We started at 30K, now we're at 68,000. Let's do it. What's going on, everybody? My name is Matthew. Welcome back to my channel, and today we are talking all things growth stocks and my growth portfolio. So all these stocks are high growth stocks, and the gold means we're up over 100% on the position. Green is a relatively new and exciting stock in the portfolio. Blue is a stock I'm looking to add more of very soon, and purple means it has a big potential catalyst coming soon. No time wasted. Let's get right into it with stock number 1, NIO, which at one point we were up over 300% on. NIO just reported their Q3 earnings, and honestly, I thought they were really good. Since we have a lot to cover today, I'm not going to go through the report in too much detail as I usually would, and let's be truthful, every other finance YouTuber has already done so. But pretty much everything you would want to go up went up this quarter, like revenues, vehicle and gross margins, sales, deliveries, new products, you name it. And everything that you'd want to go down, like net loss, their net loss, and also their net loss, went down. Another key thing is that NIO might actually become profitable much sooner than we anticipated. Bank of America boosted its price target on NIO from $23 to over $54 after the Q3 report. They believe NIO's period of uncertainty has ended, and now they're ready to increase the quality of their products while marching towards net profits. In other words, they see the scale and volume coming in and the quality of NIO's products, like their new battery, as improving very quickly. Deutsche Bank and JP Morgan also raised their price targets to $50 each, and Credit Suisse gave a price target of $60 per share. Personally, I think analyst price targets are kind of useless, but it is exciting to see the big guys recognize NIO's potential. There's no way you're getting me to sell these shares. Let's go on to stock number 2, Upwork. Ticker symbol UPWK. We're up over 100% on this puppy after a massive 67% jump since Q3 earnings. And I just want to remind anyone who's thinking of selling their Upwork position, because I get that question a lot, here are 2 sources that cite the global freelancing and gig economy at over $1 trillion, with one valuation at $1.5 trillion and the other at $1.3. And Upwork currently has a market cap of just over $4 billion. This is a puny but commanding company going after a massive market opportunity, and to me, that is a recipe for long-term growth. Stock number 3 is the Trade Desk. Happy to be up nearly 85% with this one. They also just had an incredible third quarter where they doubled their profits to $41.2 million despite the Rona. And the reason why I wrote wave as my note for TTD is because if you're invested in TTD, you just kind of have to ride the wave. And by that I mean I've been tracking TTD for over a year now, and the valuations have never really made too much sense. So if you're looking to get in, you better be looking to get in for the next 5 years at least. Their revenue outlook was far beyond expectations as they continue to reap big gains from the streaming wars and advertising in general. And I wish I could do more technical analysis for you guys, but so far NIO, Upwork, and TTD all have recently had huge jumps, and I'm really just waiting to see what sort of patterns or consolidation develops first before I start trying to decipher the price action. Stock number 4 is Square, where we're up over 40% on this position. Now we can do some TA. So right around here, I see some support around 160, and honestly, if it drifts back down to around 170 to 160, I might consider adding to this position as it hopefully bounces off this trend line. In current events, their recent investment in Bitcoin was a very Square move in my opinion, with Dorsey saying it's not about trading, buying or selling for Square. They truly believe Bitcoin will be transformative for the fintech industry, and just like they often seem to be, Square is just trying to stay ahead of the curve and learn as quickly as possible. Stock number 5 is one of the newest stocks to this portfolio. It is Celsius Holdings. We entered this one pretty publicly less than a month ago, and it's already up over 40% here. This company just reported another amazing quarter with international revenues absolutely taking off, another quarter of great profitability, e-commerce sales offsetting the fact that a lot of the places they usually sell, like gyms, are closed, and the fact that consumers moved to e-commerce shows incredible brand loyalty and brand recognition. And finally, they're moving a lot more of their partners continually to DSD or direct to store delivery, which is just overall beneficial to the company. And on top of all of this, Celsius got a price upgrade to $40 per share from Maxim after their Q3 report. But anyone who's invested in Celsius right now, please listen to this right here. There have been a couple bearish short reports written on Celsius, citing some accounting errors, some skeletons in the closet in their management, and things of that sort. I just want to make sure everyone is very much aware of this. To me, after doing some initial digging, some of it seemed like reaching, but some of it definitely warranted closer looks. It seemed like most of the accounting issues stopped after about 2018, but they do still use the same rather small auditor, but this is not uncommon for smaller companies like Celsius to do. There were some questionable things being done by different people on the Celsius team, but I don't think it's fair to assume that they would do it again, especially after they've already been publicly recognized for committing the wrongs in the past. I still remain very bullish on Celsius, but I will continue to dig deeper into these short reports, and I recommend you do too if you're already an investor. But given the allegations and the fact that Celsius recently had a huge run-up, I probably won't be buying too much more here right now until it consolidates and I get more clarity on the accounting situation. Stock number 6 is Maxar Technologies. We're up over 38% on this one. They call it the comeback kit. They had a pretty rough reaction to their Q3 report, and I responded with this video basically saying everything is still just where it needs to be fundamentally, and the team is still executing very well on their long-term plans. Do not freak out. Since then, Maxar has rebounded over 28% from the recent lows, getting some help from an analyst upgrade to a price target of $38 per share. Now, as far as technical analysis goes for Maxar, we saw it kind of reclaim this trend line yesterday, and it was able to close green on an overall red day in the market. However, today it's down over 2%. It's early in the morning. I'm recording at about 9:40 a.m. today. It did come off this as some support. Now it's trying to find this as support and hopefully use this trend line. I would love to see it close above this trend line. Hopefully break this resistance right here at about $28 and hold above that and then continue back on its uptrend. If Maxar gets rejected here and continues to drift back down, I would be patient and maybe wait for another entry around the $22 range. If it breaks through and stays above, that could be a point for a long-term entry. Stock number 7 is our play with a major catalyst coming, Virgin Galactic, ticker SPCE, up nearly 25% on this position. Now looking at the chart, I'm really not too excited about these gains in space yet, because we've been in this trading range for quite a while now, and honestly, I expect it to just drop right back down when we hit this resistance. But if we're able to break this resistance and hold above it, or break it, come back, you find a support, and then come back up again, we could see the beginnings of an uptrend, as we already have the first higher low right here. But really, it's going to come down to whether or not we can break through this resistance first. As I've said a few times now, the only time I'll get excited about any Virgin Galactic gains is once we have our first commercial flight. And this actually should be in the first quarter of 2021, which is, believe it or not, very fast approaching. If all goes well, we could see space stock hit some really strong numbers and hold them this time. Now, Virgin Galactic isn't well known for holding the deadlines that they set for themselves, but this is just too big of an opportunity to not have a small position on, even if it's just speculative. I won't be adding any more to my position unless it drops under $16 or $15. Stock number 8 is C Limited, up over 12% here. I want to keep things at a quick pace, and we're almost done with this list, and this is by far my smallest position, which means I'm definitely always looking to add this one, so let's just do some quick TA. As far as C Limited goes, I've just drawn a couple supports here, one at about 155 and one at about 142. And if C Limited comes back down again to this, what I think is a pretty strong support at 155, I'll definitely be adding around the 158 to 155 range, right where this green rectangle is. I'm just trying to stay really patient with this one. I don't want to chase it. We'll see how things go. Also, November 21st, the Patreon will be closing to new members until December 3rd. So make sure that if it's something that interests you, you get in before that. So that's something that interests you and you want to join this really strong community of investors that we've built there on Discord and Patreon, then check out the first link in the description below. Stock number 9 is a stock I'm definitely looking to add, TDOC Health, up over 11% here. In the last episode, I talked about how I wanted $10,000 invested in telehealth, more specifically TDOC. And the fact that TDOC is getting slammed due to this vaccine news is, well, I think kind of silly and perhaps a long-term buying opportunity. So for TDOC, I just drew a bunch of places that I saw as good supports and resistance. If it drops back all the way down to the high 160s, I'll probably start nibbling, but I want to make sure that it holds this support, otherwise it could break down and go to 150. If it's able to reclaim this support resistance today, which it's trying to do right now, if it can break past this and hold it, I would definitely not mind adding here, as it would be again above the 200 SMA. If it gets rejected here and comes back down, I could see myself also adding in the high 170s. So pretty much anywhere in these green rectangles based on the situation, I could see myself adding. Now, why am I bullish on telehealth given all of this vaccine news? Let me give you 4 reasons. First, a second lockdown is very likely and already starting. Second, the vaccine news itself is still very early. They haven't even been peer-reviewed yet, and the trials, a lot of them, are not even over. It seems like people think that the vaccine means everyone can go back to normal tomorrow. That's just not the case. It's going to be months and months and maybe years before things do go back to normal. TDOC, now that it's merged with Livongo, is an absolute powerhouse. Earlier on, I chose to invest in Livongo over TDOC, but then they merged. Now we get the best of both worlds, and we get an absolutely dominant player in the ever-growing and ever-expanding telehealth industry. Not only do you have the amazing technology from Livongo, but now you have the incredible reach of TDOC. And the fourth reason is simply the staying power of telehealth. At the peak of quarantine, telehealth comprised of 69% of total visits, and since then it's dropped to about 21%, and this statistic is from a couple months ago. But this was still way higher than the rates seen before the illness, which was less than 0.01%. If you think that telehealth visits will return to just making up 0.01% of doctors' visits after this is all over, you're crazy. I'm sorry, it's crazy. All I can say is I'm very much looking forward to finishing off my position here at these levels. Stock number 10, the second stock I'm looking to add big on, is Facebook, and here's why. First off, whether you like it or not, Facebook, also known as WhatsApp, Messenger, and Instagram, is deeply ingrained in our everyday lives. And now they've officially rolled out Instagram Shops, and let me tell you, just by spending a few minutes on here, I think this is a game changer. One thing I love about Facebook and the stock, and this is something we talked about in the private Discord, linked below, is that they slowly roll out different catalysts and additions to their business model. For example, they haven't even fully monetized WhatsApp yet, but they're saving that for later so they can have continued long-term growth. So for Facebook here, we just have a very simple trend line, and honestly, it's kind of in my buy zone right now, so I might have to pause recording this video and go buy some Facebook. But anything in this green area, I think, is a buy. Anything under 270, I think, is a steal. Anything under 300, in my opinion, is worth buying for Facebook. Yep, there you go. I actually just bought some more and just alerted the top tier patrons in the Discord in real time. This was supposed to be a pillar of my portfolio, but I just started hunting down faster moving stocks and it just kind of got left behind. So now is the time to build this position. Stock number 11 is Crowdstrike, what used to be my largest position, up just over 8% here. Now I actually learned a pretty valuable lesson while finishing out my position for Crowdstrike. I had fallen in love with the stock too much and I was a little too hyper bullish, and finishing out the position in the 140s was probably a little short-sighted of me. At the time, they had a price to sales ratio in the high 40s, and looking back, that's extremely expensive. The way I justified it though was by saying it was right on par with the rest of its peers, but in the bigger picture, all of them I think were kind of overpriced. But looking at the chart here today, it looks like it just broke through some resistance. It has a very strong start to the day. We'll see if this holds, but ideally I would love to get it back down lower around here. I should have hit it at 118. That was a pretty obvious support that I missed, but you know, we live and learn. Stock number 12, our final stock today, is another new, more exciting addition to the portfolio, Callaway Golf, who just merged with Topgolf, and we're at 4.5% on this position. I am extremely excited to add this stock to the portfolio, but I'm not going to tell you exactly why just yet. All I'm going to tell you is that I think they got a great deal with Topgolf, and I think it's going to become a growth company, even though it doesn't sound like it is right now. I will have a new video coming soon doing a full deep dive into Callaway and Topgolf, so make sure to subscribe if you haven't already. If you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, check our quote of the day. You might just learn something. Make sure to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. If you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous.